Welcome, everyone. I'm really excited to moderate today's conversation, the future of payments with Global Dollar Network, Worldpay, and Solana. Stablecoins are mainstream. They're everywhere. It's no longer niche. It's no longer just for trading and speculation. We're seeing them move from the edges to the global center and really kind of hitting the mainstream media as well. So, I guess from my vantage point, and I try to stay on top of things, but it's difficult. It's that every week, sometimes every day, there's news, Visa, MasterCard, PayPal, JP Morgan, Bank of America, Amazon, Walmart, rumors of Meta, all kind of looking into stablecoins and circling the space. So, it really is clear that it is the next kind of innovation that touches all things money, finance, investing, and other things too. But today we're going to focus on payments. And we are joined by some experts from the payment space. We've got Worldpay, we've got Solana, and we have Paxos, and representing the Global Dollar Network here. And with players like Worldpay kind of being one of the first movers, one of the first major processing firms, payment processors to enter, it's really clear that this is happening. The shift is real. So we're going to dive in here. We're going to start first with just some intros, making sure that everyone has a good understanding of who the panelists are. And so we'll start with you, Maya. Can you just help the audience know who you are, what you do, and how your firm is involved in payments and the Global Dollar Network?
Sure. So my name is Maya Caddle. I work at Solana Foundation, focus on all things payments, and we have a soft spot for on and off ramp. And prior to Solana, I actually built an on and off ramp, initially focused in Nigeria, then we expanded into Kenya, and we built loads of different things around that. And in terms of how Solana is involved in payments, etc. Think of Solana. Solana fundamentally is a blockchain, right? So for those who aren't Web3 or crypto native, think of Solana as it's fundamentally a network, right? Similar to how Swift or Visa card network, etc., exists in different parts of the payment stack, and that's what Solana does. And so there's loads of different players within GDN ecosystem and beyond that are leveraging Solana to utilize crypto, stablecoins for payment, and much more. And in terms of how we're involved in GDN network, we're very closely involved in the GDN network. USDG mints natively on Solana, and very excited to be on this panel.
Awesome. I see more folks rolling in here. We're just doing intros. You haven't met too much. We'll pass it on to you, Ahmed. Just a quick intro.
Awesome. Thanks, Chuk. Ahmed Zifzaf here. I'm the head of crypto partnerships at Worldpay. For those who don't know, Worldpay is a large TradFi payments player. We do about $2 to $3 trillion in payments a year. Something like 12% of the world's global credit card transaction volume flows through us as a processor. My team is primarily focused on crypto native payments use cases. So everything from on and off ramping to settling in digital assets to being able to pay out your suppliers, employees, whatever it might be, B2B, payments via payouts. That all is sort of sits within my team. And we joined the Global Dollar Network and announced it about a couple months ago. We're very excited as we're enabling USDG as a settlement currency, similar to, a euro or a dollar or whatever it might be. We can now offer our clients and merchants, which represent some of the biggest companies in the world, USDG as an alternative yield-bearing digital asset to utilize within their payment stack. My career has primarily been in early stage fintech. Obviously, stablecoins being one of the coolest technologies out there. It's something I'm very passionate about. So excited about this session today.
Awesome. And Paul?
Great. Hello, everyone. My name is Paul Bances. I'm actually the newest member of the growth team here at Paxos Trust, and I'm responsible for global enterprise growth. Prior to that, I was one of the founding members of the crypto team over at PayPal. As some of you know, PayPal did launch a stablecoin back in 2023, PYUSD. But today I have the great pleasure of representing the Global Dollar Network, which my other panelists have already mentioned. GDN is an open distributed network of leading companies and enterprises that is working basically to accelerate stablecoin adoption around the globe. And it's powered by the global dollar, or USDG, which is a USD-backed stablecoin that is issued by Paxos, primarily out of Singapore. So it's great to represent the network here today, and I'm looking forward to the discussion.
Awesome. Deep experience in the payment space. You've got PayPal and now Worldpay, and talking about the chain itself as well on the blockchain level. We have Solana. So really excited to get in here. So you mentioned the global dollar network just a bit there, Paul. Can you go into a bit more detail on how it's different, USDG, and how that's different from other stablecoins?
Yeah, no, that's a great place to start. So as I mentioned, first and foremost, it is, as the name implies, a network. It's an open distributed network. Currently has 30 plus partners, and everybody's working to accelerate sort of the stablecoin adoption of USDG around the world in the various ways that they can contribute. Again, let me just mention, USDG is USD backed. It is issued by Paxos' entity out of Singapore, and that's under the prudential regulation of the MAS. And you may have seen some recent announcements where we are now, MiCA compliant in the EU as well. But the way that the network and the stablecoin, to answer your questions, is a bit different than what folks may be accustomed to. Is first, when you look at sort of the traditional business model for stablecoin issuance, traditionally the issuer has been keeping all or most of the underlying revenue or yield that is earned on the reserve asset supporting the stablecoin. And I think we've kind of reached the point where everybody that's looking to participate in the space has an expectation that they now can participate in the economics and monetize their contributions. So with that, the structure with GDN is a bit flipped than what folks are used to seeing. And here, practically all of the revenue is shared back with the members of the network. And there's a variety of ways that the members can earn sort of that incentive, that reward, that yield. And it's based on what they contribute to the network. And it's done in a very transparent way. And you know that when you join the network itself. Basically, there's a way to earn rewards if you're just holding USDG on your platform and your wallets. There's a way to earn rewards and incentive for any USDG that might be minted on your platform and then leaves, is transferred out. We have the ability to sort of track that token and attribute that to you. So for the lifetime of that token until it gets burned, you continue to earn an incentive and a reward. There's a third way of earning a reward as well, as by accepting payments or pay-ins on your platform of USDG. So again, there's a variety of ways for folks based on what they can bring to the network and what kind of utility they can bring, whether it's demand, supply, payments out, payments in, et cetera. And actually through a partnership that we have, with Solana, there's opportunities for additional incentive and monetization. Sort of the second way that this is different is you get to benefit from being part of, the network itself, which helps address some of the challenges of having, to be able to have a successful stablecoin dealing with distribution, scale, utility, liquidity, sort of ecosystem support. Again, here, when you have sort of a network of members all working towards the same goal, you do have that ability to be able to scale this, at a greater speed than you do if you were going at it alone. So I think that's certainly something that's very compelling for folks. And then finally, Paxos itself is part of the network, and Paxos takes the lead sort of from the licensing and regulatory side, which, today is an ever evolving landscape across the globe. As I mentioned, we do this out of the Singaporean entity, but now we are MiCA compliant, in the EU as well. And we're helping address sort of these novel issues that come up, like, multi-jurisdictional compliance, to ensure that, USDG in fact can be sort of a global stable coin. So I think, Chuk, those are the sort of the high level areas where I think GDN and USDG is a bit different than some of what, the folks may be used to in the space.
Right. Got it. So multiple layers there. You've got the regulation on layout, MiCA, MAS, and others in the works. Then you have this network of participants, crypto firms, fintech firms, and others who can all kind of contribute to distribution, kind of something that we were talking about a bit earlier. And then you have the rewards mechanism, which is kind of, how does the yield get passed back? Okay, it's not just a simple, you hold the thing and get some yield. It's also related to the activity. And that is particularly useful for payment firms, such as Worldpay. And so, Ahmed, I know you mentioned a couple of months ago when Worldpay joined GDN, You mentioned a couple of use cases at the beginning there. Could you go into a bit more detail on what kind of use cases Worldpay plans to leverage stablecoins and why now?
Yeah, I mean, we've been in the space, like the stablecoin space, for a couple of years now, primarily doing stablecoin settlement. So imagine if you go to a grocery store and you pay with your credit card, instead of them receiving like the merchant receiving fiat, we essentially enable them to receive digital assets instead. So I would say that was the first big use case that we sort of brought to market. And now with GDN, we're adding more and more assets essentially merchants can get access to and can manage their treasury with. And that's really a great use case, mostly because it increases the speed of settlement, which means that businesses all around the world can get access to their funds quicker. And in the case with USDG, can get access to yield quicker. Outside of that, we basically cover all the major payment use cases that we see in the market today. So being able to accept cryptocurrency as a form of payment and being able to send out cryptocurrency as a form of payment. It sounds in the peer-to-peer world, and as somebody who's played around a lot in DeFi, it sounds usually pretty easy to do a lot of these sort of transfers, but there's so much going on in like the regular traditional fiat world that incorporating these digital assets does take a bit of time. But I would say the three main core use cases are accepting crypto acceptance, settling with crypto, and then being able to pay out in crypto as well.
Yeah, man, that makes sense. And I think it makes sense that, firms who are already crypto native wanting to participate in the payments economy would be the first to start adopting these things. And obviously Worldpay is such a large company. You want to be able to be served by Worldpay and accept crypto and get stablecoins sent to you because that's what your treasury is. You're already a crypto native firm. But it sounds like also there's an increasing opportunity for non-crypto native firms to start accepting crypto from, or accepting stablecoins from customers. Then also if they decide to start having a wallet, faster settlement. So there's benefits for both crypto native and non-crypto native firms. And I'm sure that you're seeing a lot of that traction as well, Maya, on Solana. Maybe you could talk a bit about the kind of conversations you've been having and what you're seeing happening today and how it's changed over time. And maybe any kind of pilots or deployments that you want to highlight.
I mean, look, there's been a general recognition from different forms of traditional financial players, whether they are the Worldpays of this world or other forms of payment companies or remittance companies and everything in between. There's been that general recognition of the benefit and value of leveraging stablecoins for payments in different forms. And so there's definitely been a shift, right? Especially in terms of type of partner that we're increasingly engaging with. Whereas before, a few years back, it was very much more experimental. And now it's, we have a clear crypto strategy that we want to leverage stablecoins. We're ready to do so. And we're now seeing the traditional financial players really enter and commit to this space, which is really exciting to see. In terms of then what that looks like from a Solana perspective, there have, of course, been a number of players that we've been engaging with. Worldpay, of course, one of them. Fiserv as well was a recent public announcement, and there's a lot more in the pipeline, right, that hasn't been necessarily publicly shared yet. Also, I think there's as I mentioned, there's a shift. It's not just pilots anymore. It's very seriously, we're embedding this as a core part of our product. The same way in which companies in the 90s, early 2000s started to really embed or leverage the internet, right, for whatever they were trying to achieve. We're seeing the exact same thing. So we've gone past pilot stage now, which is exciting to see, experience, and we're seeing that on a global level. It's not just within the US. Truly speaking to big global players, or big players in different parts of the world. So it's a very, very exciting time to be in this space.
Yeah, absolutely. And I've been to a couple of Solana events, several years back, and Solana has been focused on payments for a while. Solana Pay, the Solana Phone, and various different point of sale places where you could go there, use your wallet, maybe your Phantom wallet, whatever it may be, scan the QR code, pay And obviously, given the block time on Solana, it feels just like a in-person payment. And, the vision of using stablecoins for even in-person payments has been there. There's lots of different things that need to happen, but clearly, as things have progressed, we're going from like pilot stage to kind of the particular areas, the particular use cases. And now we've got, powerhouses like Anchorage, Robinhood, WorldPay, MasterCard, getting involved. Many of those joining the global dollar network, and it really feels like a bit of a tipping point. And maybe, Paul, you can kind of touch on why these firms are joining the network, and how might other fintech and financial institutions benefit from joining global dollar network, and maybe even also, what it really means when we think about a stable coin on a particular chain, where that yield goes to, and what people can do with that yield.
Yeah, no, all great points, Chuk. So I'll say, like, taking a step back, I think first and foremost, we're seeing the sort of rapid adoption in the space and folks jumping in because, the toothpaste is out of the tube, right? I think we've all accepted, as we like to say, that the first killer use case of blockchain and payments is obviously the stable coin, and, its ability to obviously transform the way that value and money moves around, the world for obvious reasons. So I think that everyone that is involved in any sort of payments or any sort of, movement of assets, movement of value, should be looking at stablecoins and how it plays a role. And I'm sure everybody's being asked, hey, what exactly is your stablecoin strategy? And that is certainly true of the members that you mentioned earlier. And as Maya mentioned, people are really leaning in to USDG and not just creating pilots. It's something that, these folks really want to embed into their platforms and into their operations. And I do think, again, as I mentioned earlier, the open nature of the network and the ability to easily monetize, the ability to, earn these rewards in a transparent way, and then be able to use that, to incentivize behavior is quite enticing for folks. And I think people are also starting to realize a little bit the complexities of being involved in the stablecoin space. And by being able to, share that amongst, the members of the network and rely a bit on, Paxos and its subject matter expertise from a licensing and regulatory standpoint is what makes, GDN, again, very enticing for a lot of these folks. I also think it's worth mentioning that sort of, Chuk, and I think you've seen this as well, sort of the community at large is becoming, much more knowledgeable of sort of the space, and whether that's because of all the discussions around sort of the Genius Act, or Circle with its highly, successful IPO. We've learned a little bit more about sort of the operations of stablecoin issuance and sort of learned about the economics. And folks are making decisions on a much more strategic basis, right? They definitely want to participate in the space. But as I said before, it's becoming an expectation that I could reap some economic benefits, by participating in the space. And other strategic questions of saying, hey, look, perhaps I do need to support a stable coin, but, I want to understand sort of the underlying economics and who benefits from that, to make sure that I'm not potentially, feeding a competitor of mine. And an example that's often mentioned there is, the now well-known relationship between Circle and Coinbase. And folks ask the question, hey, if I view, Coinbase as being a competitor because of their full suite of services or because of their, blockchain base, and I happen to be working on a different blockchain and I'm, really developing, let's say on Solana, do I really want to start, supporting a stable coin that I know a portion of that revenue or a large portion goes to a potential competitor of mine? So I think people are becoming just much more educated and being much more strategic as they decide how to enter the space. And obviously GDN with its, incentive program and transparency there, provide a wonderful avenue for folks to be able to get in, not have to do a lot of heavy lifting, but be able to participate almost immediately on something that is being driven on a global basis.
Yeah, I think the cat's out of the bag. It has been for a while in different ways. You have Tether and the occasional releases of their profit numbers, and everyone goes crazy. The most profitable company in the world by employee, and look at this. It seems like a money hack. But then once the S1 of Circle came out, it was very clear that distribution is where it's at. And the way that Tether has enabled that distribution is very different from what Circle and other issuers will need to do. And that's part of embedded into what the GDN model is, where the firms, the Worldpays of the world, the Robinhoods and the Anchorages and so on, who are driving the distribution, they benefit from the yield there. And it's kind of piece. I think this is really where the world is going, is folks are catching on and they're looking at their own mechanisms of distribution and how much influence they have over their payment flows. If you're a social media company, I mean, imagine Meta and their network. They say, well, we already have distribution. We've had it for a while. We've built it up over time. You would want to monetize that influence. And that same could be said for marketplaces, for gaming websites, for gig economies, anything where you've got some utility driving usage of your platform. Some of that usage is payment and monetary, then you can influence that. And if the way that you want to manage your treasury and your customers' float can be improved, and it doesn't happen all the time, but if you can improve that, improve the margins, generate some yield, you can use that as part of your bottom line and fund other investments, or pass that directly to the customers in various ways in terms of rewards or customer features or other types of loyalty. So I think the world is changing. More folks are catching on, and that's part of the beauty of USDG, where it's like we get that, and therefore you don't need to go and build the entire thing yourself. Just plug into the system. It's essentially the same as having a stablecoin, but now you get the extra benefit of this network and the liquidity and distribution that comes from that. But that's a lot of positive stuff. I want to switch gears a bit because, yes, we can talk for hours and hours about how amazing the world will be when everything's on chain, but there's a lot of things that need to happen to get there. And so I want to bring it back to kind of reality. And then Ahmed, we'll start with you. You've been in the space at a very, very large payments company who sees this day in, day out. What things are we missing? What gaps need to be closed for stablecoins to kind of really earn mass adoption across, these payment flows that we're talking about?
Yeah, I mean, I really think it's coming, but there's three things that people are working on. But like the three main things that I see for like mass adoption, especially on the institutional, like B2B side, there's one where it's like alignment on like which assets are going to be used, because there's this full interoperability question of, okay, I accept USDG. What can I go do with it? Who will accept it? What other businesses can I go send this and use it with? So there's this question of, is there going to be enough distribution within a particular asset class, or are we going to have interoperability that makes it basically, doesn't matter what the type of asset it is, as long as it's sort of backed by the dollar, we can kind of swap in between. Once you kind of nail that gap in the market, and a lot of that is just like a timing perspective, you're going to see a lot more like Web2 companies who feel more comfortable utilizing these types of assets as part of their treasury, because they know there's a lot of different ways in which they can develop their own use cases for using them. The second bit I would say is, and this is on companies like Worldpay, where we already handle the payments for some of the world's largest companies. And there's so many advantages for utilizing digital assets, whether it's a cost or a time or efficiency that can be gained. So enabling companies like Worldpay, where we're kind of core in the whole payments flow, allows us to basically distribute these types of assets and technologies a lot quicker than I think many like early stage companies who are starting to grow and develop these capacities. So I would say this is like sort of a call to action for anyone on the call who might be listening to this. Like Worldpay wants to work with some of like the cutting edge battle tested companies, because we can lead to major distribution across the world. And the third element is, I mean, obviously it's kind of a catch-all, but it's like the regulatory market is like fractured. You described how USDG is sort of headquartered in Singapore, but just got our MiCA license. So it's like this whole idea that you have to do this regulatory capture around the world so that you can do global payments, cross-border payments sort of seamlessly without having to analyze and study each individual legal jurisdiction to understand if your product will work there or not. But I would say like we are receiving tons of interest, whether it's the banks we serve, airlines we serve, gambling merchants we serve. Everyone is interested to know how they can essentially utilize this technology and what the benefit will be for them. And we really view Worldpay as, we are a payments expert. Now we're becoming a stablecoin payments expert so that we can drive a lot of that mass adoption. And obviously we really like USDG and the network that we're able to kind of participate in. So hopefully we can play a big part in the growth of the network and digital assets as a whole.
Yeah, absolutely. I think those are really great points. And everyone on the call has actually got us some tips as to how they might want to get some distribution or work with Worldpay. I think I'm just thinking to myself about kind of doing some like joint hackathons, like call to actions for startups and stuff, because there's a lot of folks entering the space. A lot of the ideas are the same, but it's hard to kind of see the second derivative or the third derivatives of like what the market needs. And I think, Worldpay, you'll see where you have gaps and areas where you're not necessarily going to lead in the investment. And you say, hey, look, if we find a startup or a firm who unlocks this particular capability, they're instantly going to have access to all of Worldpay's distribution, or much of Worldpay's distribution. So I think that's a really exciting thing. Maybe I'll chat with you after this. So yeah, it is just a lot of different areas to kind of go into, but there's also a lot of noise. It's a very, very challenging thing to do. I try to do it. I try my hardest in the newsletters and so on, but there's a lot of noise, and you're trying to cast through that to have a better understanding of what the opportunity actually is. And so maybe, Paul, you can kind of give the audience kind of a quick rundown of like what you think the biggest misunderstandings people have about stablecoins.
Okay. Wow. That's a good question. It kind of depends on who you ask and what their agenda is. You hear some crazy things out there, but I think a couple of misunderstandings that I come across a lot is, the more obvious one is, not all stable coins are the same. And I'm not just talking about the difference between, fiat backed and asset backed and algorithmic. I'm talking about even those that look the same on paper. You're really going to want to understand sort of their licensing and regulatory structure. They differ, significantly at times, and that has sort of ramifications as a result of that. Things like the strategy and the practice around, the reserve asset management, and what the composition of reserves are, things like that. People are going to want to really look at that and make sure they understand that not all stable coins are sort of optimizing for the same thing. And then, balance that against what their intended use case or what their need is. So I think that's number one, is sometimes, people will equate them all the same, and they're not the same. The second, I think, general misconception is there's still an education issue here. I think because of the genesis of stablecoins being mostly in the crypto trading world, people still think that stablecoins is a crypto thing. And that's certainly no longer the case. I mean, listen to the panel today. It's Ahmed talking about payments, talking about settlement, talking about banks. This is not a crypto thing anymore. This is not just, again, a how do we, move value, move, payments in a quick and efficient manner. And that all of this, as Maya said, is not going to be just pilot programs. This is now being embedded, within, these platforms. So I think people are still thinking, no, this is going to be sort of a complex crypto thing. I think a lot of that complexity is going to be abstracted away. And it's just going to lead to the promise of these sort of efficiencies and quote unquote new rails that you see, in terms of how moving, things around. And finally, I would say there's sort of a misconception that sort of the playing field or the chessboard has kind of been determined. When I first started looking at this space, back in 2018, 2019, it was a $4 billion market cap, looks completely different as it is now. And I think there's just going to be a lot that is happening in the next 6 to 12 months that's going to change, I think, what that board looks like, going forward, and things that we think, certain coins that may be, dominant in certain spaces. I think you're going to see the emergence of new ones. I think you're going to see, new use cases. And I think just everything is going to dramatically change in the next, 6 to 12 months.
Yeah, absolutely. I think JP Morgan came out with a kind of the least bullish projection of what stablecoins would get to in terms of market cap by 2028. And they said 500 billion. And the market was like, oh, only 500 billion? And we're at 250s today. So they can go double over the next, 2 and a bit years. Meanwhile, kind of like the Treasury banking community and the government thinks 2 trillion in 2028. Yep. And then you got the projections of like 3 to 5 trillion by 2030. That's a lot of growth between here and there, and where that comes from, it will vary. And
that's exactly right, Chuck. I was in an event in London last week, and the over/under of the people in the crowd there at a Goldman event was 2.5 to 3 trillion that we expected by 2030. So that seemed to be the over/under for folks.
Right, and where that will come from is I looked at a couple of projections and try to break it down and come up with my own, but it's going to vary, and I think it'll surprise people. There's just so much value being moved globally that, if you're a regular consumer, you only necessarily see maybe P2P, merchants. You have a good understanding of the business side of merchant acceptance and payouts and treasury. But there's a lot of institutional flows and capital markets related flows that occur in the trillions, some of it daily. And so when I think about these projections, it seems very, very large from where we are today in terms of the current use cases. But when you look at FX, wholesale, banking, settlement, you see that there's actually a lot of room to grow into. And my favorite example to use is just the euro-dollar market. 13 trillion of US dollars held offshore by non-US companies. That's really, really strong demand for the dollar before stablecoins even existed. And we're at 250 billion. So there's room to grow. But kind of touching on your point about the playing field isn't set. That's absolutely right. We've been in a pre-regulation world for the last 10 years, and now entering a place where the US is kind of setting the standards and other countries will follow. And yes, folks will point out that Europe was there first and UAE was there first as well, but much of the world kind of follows the US in terms of banking and financial regulation, particularly when it comes to compliance and so on. And so there's just a lot of use cases to kind of dig into. And but even outside of payments, I mentioned capital markets. There's the element of stablecoins as a settlement asset for tokenized treasuries or tokenized stocks. Solana has had a bit of a run over the last couple of days, I guess a week or so, with X stocks launching across Bybit, Kraken, and some others. There's a lot of that means for kind of folks around the world. And I know like Solana's positioning itself to be kind of internet capital markets. Maybe you can talk a bit about that, Maya, and on how Solana sees like capital markets moving on chain.
Sure. I mean, before I go into that, I actually want to add a point based upon something Paul said, right? So definitely in terms of the use cases within payments, we're seeing a proliferation. And at the moment, companies are experimenting, whether it's with settlements and whether it's with merchant acceptance, etc. But what will happen is as more and more payment flows leverage stablecoins, companies will start to hold stablecoins and hold more and more of their treasury in stablecoins. And that's where revenue sharing or income sharing stablecoins such as USDG become really important and powerful. And it means that world will come to fruition faster, right? Because why would you hold otherwise your assets, right, or your treasury in stablecoins if it's earning you nothing, or and you're getting nothing from it? It's probably better for you to hold it in a bank or in other traditional financial means, or through other traditional financial means. And what I'm starting to speak to a lot of players around the world, speaking to big Asian payment players as well, is about what that looks like, right? Because that means that you don't need pre-funded accounts in the way in which traditional financial players need in order to do cross-border settlements, right? It means that there's a world where entities and payments becomes more capitally efficient. Currently, there's about $1 trillion locked up in pre-funded accounts, right? That can be reduced significantly because instead you have a central treasury and you on and off ramp into local fiat or local currency as and when needed. I mean, that's not too distant of the future, and that becoming sooner and sooner. And USDG is a really important way in which that can become true because of the revenue sharing model. Now, in terms of internet capital markets, from a Solana perspective, we've been very, very bullish on it. Whether it's the X space and the R space at X, right? Coming on chain. The whole premise essentially behind internet capital markets is bringing up capital markets on chain, which helps to address some liquidity challenges and also the time-based challenges that we see in traditional capital markets today, i.e. that you have to have certain levels of access to be able to trade certain securities, stocks, equities, etc. Or it's limited by the times and the duration and the hours of stock markets in different parts of the world, as an example. And from a Solana perspective, we believe that this is one of the key fruitions and future states of crypto more broadly, which is that financial tools and opportunities aren't just limited based upon access. I think the fact that we're now starting to see, and Robinhood as a consumer-facing player has been really, really pushing this from a consumer angle. The idea that I or you can now invest in OpenAI, SpaceX, both private companies, is really exciting. And so I think the first step, right, that we're seeing is the tokenization of, at least from a equities perspective. There's a whole other conversation about other forms of tokenization, but if we focus on equities alone, we're seeing the first step will definitely be the tokenization of publicly available and publicly tradable companies. The next step should be, which we're already starting to see, will be and is the tokenization of equities or stock in private companies, meaning that you can get an upside from the success of that company for the first time without having to be a bigger investor. And then what we will ultimately see is that companies will IPO natively on chain, or they will basically make it accessible for anyone natively, or they'll fundraise natively on chain, as another example. And that future's coming faster than I think anyone predicted. And of course, announcements from the likes of Robinhood is a positive signal for the broader traditional financial ecosystem, right? That this is something to be taken seriously, and that more players should and increasingly are looking into. So internet capital markets, fundamentally at its core, is bringing traditional capital markets on chain, meaning that they're truly accessible to anyone. It becomes more affordable, right? It increases liquidity and addresses the liquidity fragmentation that exists in traditional capital markets. And that's not too distant of a future at all.
Yeah, absolutely. I was definitely one of those who got it wrong on the timing. This is probably the curse of knowledge. I spent some time in tokenizing equities at Paxos, and you're very deep into all the things that you're needing and what can go wrong and liquidity. And I think I wrote somewhere on Twitter that we're not going to see this for like a couple of years still. There's some sandboxes going on with the SEC, which is great, but it's going to start in the sandbox. And maybe that's going to be true in the US. But as we've already seen this week, we're live, right? We have these assets out in ways that are kind of open. Obviously, with Robinhood, it's a bit of a closed system. Eventually, you want to be able to get it onto their chain and connect it to DeFi, so that folks like I was going to say folks like us, non-billionaires, maybe there are some billionaires in the call, but can get their stock and borrow against it. That's just something that most people can't typically do, but with DeFi you can, and especially with very well-known stocks that are publicly listed and largest ones in the world, like the ones that in the S&P 500 and so on. And so it's really all about access. I think you mentioned that as well. Tokenization, blockchain, it reduces the costs, it makes ledgering much more simple, provides access to stocks, provides access to the dollar, and this is kind of along that line of continuation. And very, very excited to see all that move. So I think this is a kind of good way to mention the fact that these are problems being solved. That people want access to the dollars, and stablecoins, or at least 99.9% of stablecoins have enabled that. People want faster cross-border transactions. They want cheaper funding by not having to pre-fund. They want to get funds in the way that their treasury already operates if they're already crypto native. These are all jobs to be done, and they say, hey, I just want to run my business. I just want to send money. I just want to buy and invest. And then tokenization and stablecoins are making it possible, rather than kind of trying to bash every problem with stablecoins, but finding real problems that stablecoins are solving and then using it that way. So those are just a tidbit of things that I'm excited about. Lot to come. We only have so much time, and so we're going to wrap up here. And so I guess we'll just kind of do a bit of a free for all, or we call it a round robin, really, on call it a bold prediction or something you're keeping a close eye on, something that you're excited about in the next kind of year or so. So Ahmed, let's start with you.
Yeah, I'll give you some fun ones, and then I'll give you some ones that I would go to the news with. Fun one, I think within the next year, you'll see Worldpay be one of the largest drivers of distribution of USDG, which I'm excited about. We have a lot of things in store, and we're really trying to get ahead of where we think like merchants, both in the Web2 space as well as within our exchange book, will be to be able to provide that level of service where you're going to see a lot of growth and usage of this type of stablecoin. So I think it would be like more of my fun one. In general, like what I'm watching in the markets is like interoperability standards as they're emerging. And the other thing that I'm really excited and I think will happen, maybe not this year, but maybe next year, is that you will find like a regulated fiat-backed stablecoin become a default option for a lot of different corridors or a specific corridor for cross-border B2B payments. So we'll displace things like Swift and other sort of existing systems. I think we're just seeing so much demand and so many companies like attack certain corridors that I think they will replace what exists today as a default option at some point.
Yeah, no, I like to hear that. Okay, Paul, what are the things you're watching closely? Predictions.
Yeah, so I'll do two. First, on the global dollar network, couldn't be more bullish on that. Thanks to the strength of and the quality of the members that are joining. I think we're going to start seeing, some great work by the network and sort of scaling and building up, and folks are leaning in, as I said before. So I think that same 6 to 12-month period I said is going to be very exciting for the stablecoin space. I think you're going to see GDN emerge, as just an option for folks that I think, is going to provide an avenue for folks to get into the space in a very easy fashion. So I think you're going to see a lot of companies, a lot of enterprises sort of lean into that. On a personal note, before my PayPal years, I came from the money remittance world. I think one of the areas that we're going to see massive disruption with stablecoins is in the money remittance space, the P2P space. I think for a variety of reasons, that industry is ripe to change a bit. So whether it is on the front end side between people sending stable coins to people abroad, or whether it's in the back end, for settlement to do away with sort of pre-funding requirements, I think that is an industry that's going to undergo a lot of change in the next 12 months as a result of stablecoin.
Yeah, absolutely. That's definitely a hot one. And Maya, what about you?
Last but definitely not least. So I think in terms of, I'm also going to follow the trend and do two predictions. So one is what I alluded to and mentioned, right, is that we'll see the amount of capital trapped in pre-funded accounts in correspondent banks around the world reducing. Hopefully that will come in the next year or so, and I think it's coming faster than we had predicted, right? And that's really exciting to see. And that will happen because more and more companies will hold more and more of their treasury on chain, probably to begin with in USD denominated stable coins that have revenue share or income share like the likes of USDG. And that's very exciting to see. And seeing them, say, okay, well, rather than me having money trapped in X country or Y bank, let me just have this central treasury and I will off-ramp into whatever local fiat I need as needed and when needed. And so I think it's a very exciting space for how on and off ramps will evolve in the sort of companies that they will start to serve. I think the second prediction is one that I find a lot of people overlook, especially in the West. And that is non-USD denominated stablecoins. And when I'm talking about non-USD denominated stablecoins, I'm definitely not thinking of Euro or GBP or whatever denominated stablecoins, if I'm being honest. I'm thinking of stablecoins that are denominated by and pegged by fiat currencies in LATAM, in Africa, in Asia. And that's going to be increasingly important. There's some remittance players that I speak to that don't have any exposure to USD because they don't serve corridors that require that exposure. And at the moment, they are limited to the extent to which they can truly leverage stablecoins. And so I think there's a really excited medium, not even short-term future, to be honest, where we see the more and more proliferation of local stablecoins. And it's something that I personally care a lot about, whether it's from an on-off-ramp perspective or a payments perspective, because local stablecoins are really important in the short term for being able to pool together a depth of liquidity that is not achievable in many emerging markets without local stablecoins in order to satisfy on and off-ramping needs. And so I think that's something that a lot more people should be thinking about and keeping an eye out for. And it's something within Solana that we are increasingly looking at and towards.
Yeah, I cannot emphasize that enough. I'm so glad that everyone did like two. It was more than we bargained for, and we got extra insights from everybody. I'm definitely going to jump on that on-chain FX side of things. I'm borderline obsessed with seeing that happen, and there's lots of reasons that it should happen, but there's also lots of friction to get there. Non-USD stablecoins or 1Ps, and getting the trust of the local issuers, them getting the sufficient liquidity on chain, getting the right volume, moving in the right direction so that you can net and make things very efficient. Seeing either automated market makers or maybe like on-chain central limit order books that can work with, partial delay settlement. You don't want to settle, trillions and trillions of transactions on an atomic basis all the time. Maybe, but I don't think any chain can really support that. But if you net every 5 minutes or every hour, you can start to get really, really efficient. And we're looking for, I guess I'm looking to see how that will develop, either with like open protocols or like dark pools. But the whole concept of these currencies that are, open and they're available, and can move 24/7. They should move 24/7. I think it's a very, very clear opportunity that blockchain can solve. So I'm excited to see that happen. But in general, I think, in terms of people looking for opportunities in the space, there are everywhere. And it's really, you got to find areas where the new solution that you can implement with stablecoins is miles better than the existing alternative. And that tends to be in emerging markets, and it tends to be in places that don't have the greatest banking infrastructure. And you just so happen to be in a situation where emerging market consumers, particularly in areas of volatile currencies, they're holding stablecoins to hedge that currency. But now they're holding it, they're sending it to their friends, they're using it to pay, and that kind of drives a flywheel of acceptance. And even when you're adding Visa and MasterCard backed, a stablecoin backed Visa and MasterCards to this system of these consumer wallets, you're then unlocking utility of these stablecoins that folks are already holding to the 150 million merchants that accept Visa and MasterCard. So now you're getting businesses involved. And so businesses are benefiting already, like Ahmed said, on the treasury side, improving their operations. Cross-border payments is a huge one, like Paul mentioned. But then as there's some comfort around using stablecoins internally, then there's more opportunity to start paying with them. And particularly we've seen early kind of movement on the payroll side of things, where the customers are asking for stablecoins. That's a very obvious use case. But as more and more businesses and individuals accept stablecoins, the payouts will just be a necessary additional rail. And so there's a lot of really cool things happening on both the consumer side and the business side, and that's all supported by the increasing number of infrastructure companies, orchestrators, be it kind of banking as a service stacks like Grid by the Squads team, or the Crossmint team, or just putting these things together where you can plug in them directly. A lot of really, really exciting things to come. And so, I mentioned a lot of different things there. I think on-chain FX is the one that's probably closest to my heart in terms of what I want to see happen. But the space is large, and if folks want to kind of follow along the conversation, reach out to the panelists. We've got the details in the message. Global Dollar Network is the tags here as well. Folks, many of us write or appear in various different things, but please just, if you have questions, you're looking for opportunities or looking for it, you can plug into the system. Just hit us all up on Twitter, and or X, and we'll get back to you when we can.